what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss. Yeah, I don't even know what it costs. Yeah, I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
All right, let's do this, everybody. Welcome to the morning show here on Stock Market TV. Spencer, JC, Steve, with you as always. Let's do this. Let's talk about this winning streak that we are on, the S&P 500. Let's talk about the bull market breadth we are seeing, and let's talk about what's moving this morning. A lot going on here. Stephen Weitzel, fan favorite, and Bocce extraordinaire on the show today at 9. That'll be fun. And we'll have Glick on. We may talk to Patrick Donawilla. We'll see how the show goes. What's up, chat? How we doing? Luke, Ron, G, Brian, Ravi, Elijah, Dawson, and Phil, and whoever else I missed. Good morning to all. Let's go.
All right. GM. Welcome to the show. Did I hear you say that Stephen Weitzel is a fan favorite? Is that right?
Yeah, everyone's a fan favorite.
Oh, now you're just throwing him under the bus, so he's not a fan favorite? You were just saying that?
Of course he is.
He's one of my personal favorites. Does that count?
Yeah, of course.
How was the conference call last night? Did you enjoy that? Did you watch it yet?
Solid. I was not there live. I caught I caught most of the replay afterwards, and then I just tried to finish it this morning, and then I didn't. But I caught most of it.
I usually have like this like post conference call hangover, whether I drink or not. Sometimes I'll have a couple of glasses of wine to wind down. But I'm like more tired, more thirsty the day after. I don't feel that way today.
Yeah.
I don't know why. I didn't do anything differently. I drank just as much water. I feel like, kind of like a rock star. When a rock star goes out and plays in front of a stadium and is all fired up, and like then the concert's over, but you still like your adrenaline is still like rushing. It's kind of like, my version of that.
Yeah. Real fast. Let's do something we haven't done for a while. Elijah in the chat just says watching us from beautiful, I guess that's pronounced Budva, Montenegro. Comment in the chat where you're watching us from right now. I'm just very curious. We did this once like a year ago. I'm just curious. Where are y'all? Where are we talking to you from? Where are you watching us from? I know we have people all over the world. I just kind of want to see where you all are at, because we're in the East Coast. Over U.S. here,
we got people in Toronto that watch every morning. They told me last week, they were like, JC, I'm watching every morning. Yeah, and something I was going to say it in today's meeting, but so many people at the event last week in Toronto were like, JC, thank you so much for you and your team, and like going out of their way to talk about the team. And I caught myself so many times saying, I'm going to make sure to tell the team. I got to make sure to tell the team that, probably like 20 times in the course of 48 hours.
Did you tell the team? Did you tell the team?
I got to tell the team. I haven't told the team yet. The team yet.
All right.
We have a meeting today. Yesterday was conference calls, a special day.
Hey, we got nice.
Texas in house. Shout out Toronto. What's up, Hassan? I saw you there.
Geographic diversity here, all over the world. I'm seeing Italy, Australia, South Africa,
Maryland.
Yeah, shout out Detroit. UK, of course.
El Salvador.
Calgary.
Nice.
We're in a lot. Good stuff.
Madison, Wisconsin. I got to go to Madison. I heard it's a good party there.
That is near the top of like places I want to visit as well, mostly because everyone says Madison is like one of the best like college towns, but also it's like Ann Arbor. It's like part college town, part like just awesome town.
In the old days, remember when Playboy would do like their top like 50 party schools, or like, top 50, like best looking. It was Wisconsin was always there.
Yeah.
And I was from Miami, and I always found that like kind of like strange, because I was young and dumb and I didn't know anything. And I always found it like silly that they would choose a place in Wisconsin, because I didn't know any better, because I was just a dumb kid in Miami. And now I get it and I love it. And I still haven't been. I need to go.
I need to get to Wisconsin, to Madison and to Columbus. I've been to neither, and I want to go to both. All right, enough about that. Let's do
State of the markets.
Yep.
Do it. All right, ladies and gentlemen, we've got not much going on this morning with the Dow futures, pretty much flat. 41,000 for the Dow Jones Industrial Average. What is that, Spencer?
All right, my bad.
41,000 for the Dow Jones Industrial Average. How about that? S&P 500 futures are flat as well. 56.30 for the S&P 500. NASDAQ 100 futures, I mean, just a hair from back above 20,000. So we're looking at 19,855 for the NASDAQ 100, which is flat on the day. 30-year bond futures also flat, above 124. Crude oil also flat, just under 74. Copper flat at 420. Gold is up almost a 4% though this morning. That's the biggest mover of the day. 25.60, new all-time highs for gold. Silver up 1.6%, trying to get back above 30. Shout out silver with the VIX back at 15. How about that? Over in the funny money land, big moves in cryptocurrencies with Bitcoin up 2%. 60,700, up 1,200 points this morning. Ethereum up 0.5%, 26.50. Solana 146, up 1%. Binance trying to make some moves, 1.8%. What happened to Binance this week? 570 for Binance. Something happening there. Total crypto market cap, Spencer Israel, 2.09 trillion, with the Bitcoin dominance hanging in there above 57%. How about that?
I mean, that's all well and good. I'm mostly focused on this S&P 500 winning streak we are on, which I believe the stat I saw was one more day would be the longest winning streak in like 23 years or something like that.
Fill me in on how many days in a row this thing is up.
I actually don't know how many days in a row. Let's go count right now.
Count right now. 1, 2, 3, 4, 5, 6, 7, 8. Do I have that right? 3, 5, 6, 7, 8. 8 days in a row.
3, 4, 5, 6, 7. Yep, that's what I got.
8 days in a row and 9 out of 10
yep.
From those Monday lows. So since the volatility index tripled, the S&P 500 is up 9 out of the next 10 days. How do we feel about that?
Pretty good.
Pretty good, huh? Again, I think it gets back to the sentiment washout. Sentiment, as we've discussed, was, pretty optimistic. A lot of complacency with the VIX at 10. Newsletter writers were like the most bullish ever. Individual investors, I mean, things were pretty complacent. And it's tough to time, excessive bullishness. These are much better signals when there's extremes in pessimism, which obviously we're seeing the opposite.
Yeah, but the thing about the VIX being at 10 is it had been there for quite a while.
It was one of the several things. In fact, we could throw up the chart if you'd like. I think it really kind of tells the story here. Throw up the new slide 1, and then we'll get into some of these charts. Throw up the new slide 1. This will really tell the story because it's a combination of things. It's what they're saying and what they're doing. So here we're looking at the AAII, which is the American Association of Individual Investors. You've got the II, which is Investors Intelligence. These are newsletter writers. And then you've got the NAAIM. These are active investment managers, a lot of financial advisors. I actually spoke at their conference last week. Great crew, by the way, NAAIM. Shout out to them. And then we're looking at the VIX and the put call ratios. And as you can see, as you're further down to the bottom of this chart in that plot at the bottom there, the further down you are, that's the more risk, right? Those are extreme bullishness. That's evidence of complacency. As you get to the upper end, those green levels up there, that presents opportunity. Those are excessive levels of fear and drama. And now over the last couple of weeks, we have gone from excessive bullishness, excessive complacency back towards the middle. And that's the thing about sentiment, guys, is that it's almost never at an extreme, right? Sentiment is almost always somewhere in the middle, which is, why sentiment is really, it's hard for people to wrap their heads around it because humans are just always looking for extremes. We're always looking for something that's actionable. Usually this is not. So the way that we are interpreting, the way I'm interpreting it anyway, is that we're coming from a level of extreme complacency to back in the middle. So now sentiment is no longer a headwind like it was a couple of weeks ago, right? That's how I see it. So we're somewhere back in the middle. But why don't we go to, I think, the most important thing, because I don't necessarily know what, the S&P 500 up 9 out of 10 days and up 8 days in a row. I don't know what that means. Like, the most bullish thing that a stock can do is go up. That I know. So these things are going up. So it's not bearish. That's the end of it. Why don't you throw the new lows list? Because we know mathematically you cannot have a bear market or a correction of any kind without the prices of stocks falling. So if we know that, we should probably go and count how many stocks are falling in price in order to be able to decide whether we're in a bull market or not, whether we're in a correction or not. Can't have those things without the prices of stocks falling. And as common sense as that is, like just saying it, it's like, oh yeah, duh, JC. Well, yeah, well, as it turns out, almost every investor on the planet chooses to ignore this data in favor of arbitrary things like the economy or, whatever they call fundamentals, JC, right? Like they'll choose those things in favor of basic arithmetic, right? We can't have like, the world's falling apart, JC. Every crash any day now. Yeah, I guess, but there's no evidence of any of that at all. At all.
Would this chart look different if it was looking at the NASDAQ composite?
Would the chart look different if it was looking at the NASDAQ composite? It's a good question. That's a good question. The answer is no. We're not seeing like extremes in the new lows list. It wouldn't look exactly like this. It would probably look about the same. But that's a good question. We'll run that.
Yeah,
we'll run that.
Because the NYSE's what? That's like 2,000, 2,100, 2,200 stocks, right?
Yeah, and you don't have all the garbage that's in the NASDAQ composite, right?
Right.
So think about the long tail in the NASDAQ composite. That's just all garbage. So most of the NASDAQ, when you really drill down to it, it's mostly garbage. And then you have your quality.
It's just more unprofitable tech and a lot of biotech, but unprofitable tech, right?
And also, Spencer, you're not getting the international exposure in the NASDAQ that you're getting in the New York Stock Exchange.
That's a good point.
And you're also not getting any energy or financials or real estate or industrials or materials in the NASDAQ.
But I'm thinking about it in terms of what would who would be the first ones to fall, and my assumptions would be international or unprofitable tech. So in that sense, I guess they're even, right? Because
no, I've really given this a lot of thought, and I think that the greatest universe of stocks that we can go in and hand select, because we run these numbers on Russell 3000, S&P 500, Russell 2000, Russell 1000, right? We run these numbers on all of them.
Yeah.
And I haven't heard any argument that goes counter to the fact that the New York Stock Exchange is where the most important stocks in the world trade. You're getting the international exposure, right? Because, you got a huge percentage of the largest companies on the New York Stock Exchange aren't even from America. Those are ADRs that trade on there. And then again, to reiterate what's not in the NASDAQ. In the NASDAQ, let me go down the list. You have 0 financials in the NASDAQ. You have 0 energy in the NASDAQ. 0 materials, 0 real estate, 0 industrials, right? You don't have any of those things, and you don't have the international exposure either. So while we do look at the NASDAQ, obviously, and we look at the NASDAQ composite internals, and we look at the new highs list and the new lows list, the new highs list on the NASDAQ actually made new multi-year highs last month, the new highs list. But it's the New York Stock Exchange composite, to me, is the best universe if you really want to get a good look at what stocks are doing.
Good.
Right?
The point is that they're different, so they're both valid because they're both very different. Yeah. I like this comment from RFCCW949 in the chat. By the time you see, I'll bring it up on the screen actually. By the time you see the new lows list spiking, the correction has already begun. It's not predicted; it's confirming. Yeah, I think that's the point, right?
No, that's not right. That's not right at all. When you see the new lows list spiking, you normally see the new low, like almost always, you see the new lows list spiking and the index is continuing to make new highs. right? And you already have that
Sometimes, yeah,
deterioration
that's
as
true.
the indexes are making new highs. So, yes, by the time you see the new lows list spiking, the correction has already begun. Yes, but you're just not seeing it at the index level. You're seeing it only at the stock level.
Yep.
And it's not predictive, it's confirming. Yeah, it's not predictive of anything. That's right. It's confirming, but you're not going to see it at the index level. The headlines are going to be S&P 500 closes at all-time highs. The headlines are going to be Dow Jones Industrial Average closes at all-time highs, or NASDAQ closes at all-time highs. The part that these journalists are going to purposely leave out because they're not here to help you, usually they're here to hurt you. The part that they'll leave out is the part that most stocks are not making new highs. In fact, the list of new lows keeps expanding. That's what they won't be telling you. So if you're curious what the articles that these journalists, the glorified gossip columnists are going to be writing near market tops is exactly like that. They will leave out the most important part and only tell you what's going to get you to click on the article, right?
If I may, it's not as if the financial media never writes about breadth. They do. I know because I read it, right? So they do. They maybe don't quote the new highs and new lows list as much as the price of the indexes yesterday, right? But they do talk about it. It's not like they ignore it entirely. It's there. You have to look for it a little bit, but it is there. They talk about it. They acknowledge it.
They're a great journalist. They're a terrible journalist. There's everything in between. I'm specifically talking about the question, which I think is a great question, that when you're seeing these expansions and new lows, it's not predicting anything. It's confirming that the correction has begun. That's exactly right. And we haven't gotten that at all, is kind of my point, right? But those are the types of articles that you're going to see at those moments. Why don't we go to the next one? This is a really interesting one. So I'm being told, oh, JC, but it's consumer staples and utilities, and it's this defensive rotation, and that's always at the top. That's what you see at the top, JC. Consumer staples and utilities making new highs. The market is going to crash any day now. This recession and this unprecedented debt that this government has, this is unsustainable, JC, and that's why consumer staples and utilities are doing well. That's what they tell me. Do they tell you that too, Spencer? That's what they tell me.
Not in those exact words, but the crash has more to do with the quote-unquote economy than it does whatever the market is doing. But yeah, the same sentiment.
Isn't that hilarious, the economy? Okay, so if consumer staples and utilities were the only stocks going up, you see, that would be the problem. But if you go back and you study every bull market in history, go back 100 years, you know what you're going to find? You're going to find that in those bull markets, consumer staple stocks and utility stocks do well. You know why? Because they're stocks, and because those are bull markets. And these types of stocks go up in bull markets, in all of them, right? Go back and look. So the fact that these are going up in this bull market, if that's surprising to you, you are just telling everyone around you that you haven't actually gone back and done the work. So if you go to the next slide, which is the most important of all of these, is that it is not just consumer staples and utilities that are going up. In fact, financials and industrials are both making new all-time highs. And there's nothing defensive about financials or industrials. In fact, financials and industrials are two of the most offensive sectors that this stock market has. And both of them are making new all-time highs. So yes, if it was just utilities, if it was just consumer staples or just utilities and consumer staples that were going up and the rest are going down and those new lows lists are expanding, fine. I would be right here talking about it. But that's not what's happening. It's not what's happening at all. It's just that this is a bull market. And in bull markets, utility stocks and consumer staples go up in price. In all of the bull markets, go back. All of them. They go up. Perfectly normal. Thoughts? Concerns? No pushback?
What? That things go up in bull markets? No. I think
the staples and utilities aspect of it.
I mean, yeah, sure. Like, if there's one thing to hang your hat on, it's that, right? It's like it's everything you just said about the defensive nature of those sectors rising. But as you then followed up with, it's not like maybe if it was only utilities and staples, then I could see that argument, right? But it's not.
Also the by the time they tell you that we're in a recession, the stock market has either already bottomed or is in the process of bottoming, right? By the time they tell you that we are out of a recession, the stock market, many of these indexes will have already been up 50, 100%, right? So if you're waiting for these economists to tell you when it's time to that things are good or bad, you're 6 to 9 to 12 months behind the curve. Why do you think economists are so wrong so often? Because they're ignoring the leading indicator. They are going out of their way to purposely close their eyes at what we know for a fact is a leading indicator and a discounting mechanism, this thing that we call the stock market. And the economists, I have no idea why, like they pretend like it's not happening. They're like, oh, there's nothing to see here. Pay no attention to what's going on behind the curtain, right? Like, why? I don't understand that. It's so silly. Like, if you really want to know what the economy is doing, or if you want to look at the discounting mechanism, why don't you go look at the discounting mechanism? Go look at what the stock market is doing, and not just in the United States, but globally, right? Like, people have these like weird like fetishes with like these like macro conspiracy theories about like House of Cards and all of these things. Like, it's like a really weird. I mean, I don't know. Like, we were talking about the other day. Like, maybe like it's a sex thing. Like, they just like to be like,
okay. It's funny that we were talking about this now, and let's bring Kenny on after this. But we got an email from a Brian McLaughlin yesterday. No relation to Sean, to my knowledge, although maybe there is. I don't actually know. Just kind of talking about this very concept of like but it's a recession, people, and he had a whole bunch of thoughts that I thought were interesting, and it really came down to like, are they going to go back, and at least how I read this email, are they going to go back and like say, oh, actually it was a recession, but now we're not in it anymore, right? Are they going to like go back and retroactively call it a recession? I don't know. It's interesting. It's the
beauty of all of this is that recessions are a choice for most of the people who matter to the stock market.
I don't know if I like that argument, but okay.
You don't like that argument that recessions are a choice for the people who have the most exposure to the stock market? You don't like that argument?
Okay. With that qualification, maybe, sure.
So my point is, like, if you have real exposure to the stock market, who cares about the economy? Like, what does it matter?
All right. Well, let's bring Steve is here. Who gave us a super chat? Wagner. Steve is here. He'll be on. He'll be on in a second. But let's bring Kenny on, and then we'll see what's going on with Mr. Strazza. How about we do that? All right.
It's been a long time coming. They ain't cuffing my clock, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Kenny in the house.
But since I gave you something that I knew you lacked, you consider me a new jack. What's up, y'all?
8 days in a row for the QQQ. Kenny, do you remember when it used to be 4 Qs?
I do. We call it the cubes.
Yep, that's right. And I think that it's because like for years, there's a lot of foreigners in New York City, right? Like a lot of foreigners, particularly from Europe or from Asia, and they would just run around Wall Street talking about 4Q, 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 and people were just taking offense to it, so they had to change it to 3 Qs. That's what happened there.
Oh, okay. It's kind of like when I wrote an email to Cummins Engine. We'll just end that right there. If you guys go way back, Cummins Engine, you know what I'm talking about. I said, you might want to change the symbol. Maybe. I feel bad pitching this to my clients. What is this? Who's on the phone? This is gross.
8 days in a row for the QQQ. Too far, too fast, or just right?
Oh, it's just right. Because again, you're not going to convince me that wasn't a coordinated attack against me and complacency and short vol people. So they want to get us out of the way so they can move on with the bull market that never ends.
And the yen and those yeners.
What?
The yeners.
What's that?
Short yeners.
Oh, the short yeners. Yeah. Oh, I don't even know what a yen carry trade is, but now I've got it tattooed on my back, right next to the tattoo on my ass that says, if you can read this, I guess I'm in prison. But listen, I'm just about rockets, AI, space, and robots right now because that is the shiznit.
Okay,
Rockets, robots, space, and AI. So give me the chips. Give me my SOXL. That's my chips. That powers the AI. That builds the rockets to go to the robots. We'll go to the space. So ASTS continues to rock.
Yep.
You got something called Rocket Labs. You got Lunar. You got my little penny stock RR. You got the robot Serve. So all I know is I'm a freaking robot now, and all I'm trading is these stocks. So it is absolutely incredible. I'm just staying where the money is. I mean, the Estee Lauder trade was fantastic, but it feels like that was a million years ago. Stick with the rockets and the robots and the space and the AI right now, because one of my favorite things, and I know you're always looking for the bull, and you're great at it, and I love it how you're always mocking, and again, the recession and the economists, they're always wrong because they're always looking at the wrong data. I look at the market, I get
a good point. Like, have you ever wondered why the economists are always wrong? Like, has that ever like crossed your mind? Like, how come these people are like it's impossible to be as wrong as they are always? Like, how are they doing that?
Books.
What Kenny just said. They're just
looking
at the wrong thing.
They're looking at the wrong thing. They're looking at the wrong thing. So what I look at right now is a few people called me out of the blue and they said, what do you think about this ASTS? And usually that's the top. When the strangers, when your barber's calling you about the stock, or your neighbor says, hey, what, you think I should buy into this? But the people that called me said, this thing's going to crash any day now. No, we're not going down. So that was the commentary. And the same people were the ones that called me about 6 months ago. What's this NVIDIA all about? This is bullshit. It's going to crash any day now. I'm like, no.
I call shenanigans on this story, Kenny. You don't have a barber.
True.
Kenny, are you talking about the Vaz? Because she's been all over this too. The
ASTS. I give a shout out to the Vaz. Gave her another shout out online yesterday. First one talking about this thing, again. And it really just gels with exactly how I trade. Everything's a pump and dump to me until proven worthy. And when you keep seeing the dips being bought on bigger volume than the sell-offs, you got yourself an uptrend. And then you got breakouts and blue sky breakouts and everything I learned about trading from 1999. Here we are. Gimme. And the option volumes are exploding. They're creating new strike prices. And when you see a stock that's breaking through prices that don't even exist, the shorts have no way to hedge themselves now. And that's when you get even more.
Hold on. Let's stick with this theme, because this is something that we've talked about internally briefly over the years, but not extensively. I'd love to hear your thoughts of that indicator that you just mentioned. They're creating new strikes, like they're creating new contracts. Like, talk to me about, like, explain what that means to the folks listening, number one. And number two, like, what does that mean to you?
Okay. When I first started looking at this stock, there was only the 25 was the highest you can go. And I was like, if it breaks 22.50 and gets through 25, guys that want to short, and again, I know where they're coming from. $5 stock that's at 30 or 20, you're thinking about shorting it. So when they have no way to protect themselves, because it's an easy protection. You buy that outer strike just in case you're wrong, and now you've got your upside protection. There was no protection. So now I saw them creating the 27.50s, the 30s, the 33s, the 35s, and the stock kept powering higher. There was only a 35 left. I was like, all right, this thing's going past 35. So when just like when Carvana crashed down into the fives, they stopped making options above $50. So when it started to rocket,
I see what you did there.
It was the same kind of situation. So then they created the 85s. I was like, oh, now they can only protect themselves up to 85. This thing's going to 120. So it was just one of those, again, you're always looking at the tea leaves, you're looking at the market, you're trying to get an idea. It's just one of those things that I noticed that, hey, you know what? This thing's gonna
These are decisions that are made by the exchange when they are seeing a market that needs to be, right? If they're seeing demand for a particular market that does not exist, they're going to create that market. These are exchange driven decisions,
right?
Not the companies that make the decisions.
Oh yeah, for sure. Right.
So and it's strictly based on supply and demand, which I really like that. That's why.
Oh yeah. I'm glad some of these stocks actually do have options, because now, again, if you want to participate, and you should be nervous, this is a $5 stock trading at $40 now. you should be nervous. And there probably will be a correction. But you know what? There was a correction on Friday, just like this market. So everybody's waiting for that correction. You got it. You got more than a correction. You crashed. Bye. We might be rallying for 5 to 7 years now. After what we just witnessed over those 10 days, when we just got smashed, the volatility explosion, that's something you don't see too often. And when you do see it, look what we went into. That was a pandemic, was the last time we saw anything like that. Before that was 2017, 2018. I think it was they gave it a name. I think it was the China contagion or something like that. Whatever they name it, they always give it a name.
It was the taper.
Right. Taper tantrum, whatever it was.
Remember the sequester?
And then we move on. And then we're in that mode where people are like, well, is the worst over? Are we going into a recession? And as everybody's debating, like you were talking about, all we do is climb. All we do is climb. And then finally, there's this comfort where we rally 25%. Oh, I guess it's safe to get back into the market now. And it's just the same cycle over and over and over again. So right now, I think we could have got to 484 on the Qs. We got pretty close. So now I'm thinking we might actually put up a fight here for the Bears. Okay, so Bears, if you're out there, I'm actually thinking about shorting the Qs today. I know, crazy, but I'm probably
give me another name, Kenny. Give me another name on the move this morning.
Oh, I'm also looking at SOND. This one just is absolutely great to trade, and keep an eye on Lunar. I mean, their ship got to, I think, where it was the Mars or the Moon. Again, I don't know too much about these companies, and I think their thing fell over, and the stock's still in play. So whatever they were doing, it didn't really work. Nobody cares. I love stocks that nobody cares whether they make money or do anything right, and they still go up. So that's where I'm focusing. And
I like that.
Again,
too.
For us day traders, we just want the action. We got to get paid and then go play pickleball. By the way, I'm feeling lovely. Anybody wants to challenge me? Bring it. I'm up to about a 3.8, 3.9 now. Let's
come
go.
out by me. We'll play a little pickleball by me. Why don't we do
All right. Get ready for my
I got
spin.
some nice pickleball courts.
I got
playing real tennis like a real man.
I can play it all. Give me a racket. I'm ready.
Excuse me. All right. Done. Deal.
Thanks.
Spencer's coming too.
I'll see you guys later.
Oh, sorry. Cut him off. Strazza, you here? Steve? What's going on? Yeah? Is that a yes? Okay.
We have Stephen
What up,
Weitzel.
man?
What's up, Mr. Strazza?
I'm gone for 15 minutes. Everything falls apart. They're talking about my cats and my quiche in the chat. What's going on?
I want to take a. I gotta back up Strazza here. I got you, bro. I don't think, in theory, yes. If you eat quiche, that makes you less of a man. Like in general, like yes, I kind of agree with that in principle. However, every year on March the 9th, I sit down with my family and we have a T-bone steak, cheese, eggs, and Welch's grape, right? And we listen to the Notorious B.I.G., playlist for the entire evening.
Mm-hmm.
My in-laws absolutely love this celebration. They have no idea who this rapper is, but they love to join me once a year for this celebration where we celebrate the great life of Christopher Wallace, Notorious B.I.G. from Bed-Stuy, Brooklyn. And so we have a T-bone steak, which over the years I've kind of evolved into the porterhouse. Just go full porterhouse because I feel like Biggie's not going to get mad at me for getting the porterhouse over the T-bone. Like he would be cool with that. And then for the cheese eggs, we make a quiche.
He wasn't talking about
the cheese eggs.
He wasn't talking about quiche. He was talking about scrambled eggs with some cheese.
Oh, but there's nothing wrong with a quiche in that sense, right? Put bacon in the quiche, and then instead of the Welch's grape, we go full Cabernet Sauvignon, right? That's how we roll. But in that scenario, like it's cool. Like, but if you're eating quiche like on the reg, yeah, that's no good.
Yeah, no, I am. Almost every day.
You eat quiche every day?
Almost.
Wow.
I had a farmer's market quiche yesterday. It was fantastic. But enough about that. Let's bring on our guest.
Stephen Weitzel, a fan favorite, I'm told. I didn't know that.
Stephen Weitzel. He's here. He's what I call him, a bocce extraordinaire. That's what I call him, I think.
Something like that.
Right.
You call them worse things. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Weitzel, how are you?
What's up,
Do
boys?
you know that you are a fan favorite? I didn't know.
I'm not surprised.
I am a little.
I'm not surprised
A
in the
little
least.
surprised. Didn't see that one coming.
I'm going to tell you I'm going to tell you what does surprise me. You got Kenny on here wearing a UGA hat talking about going to space.
Is it hilarious because the Georgia Tech people make fun of Georgia because they're not smart enough to do such things? Is that what you're implying?
Yeah, they're never going to space. They're never going to be there.
And I heard that Georgia was a good school. Is that not true at all?
For what?
I don't know.
Hey, listen, rumor has it they're adding a library and a bookstore.
And so Georgia Tech is a far superior academic institution?
I mean, it's the greatest.
I don't know
in the
because
world,
very few people know where Georgia even is. So, like, I'm not really sure, like, what goes on there. So I'll defer to you on this.
I know why you've forgotten about it.
Because it's one of those flyover states in between Miami and New York. Like, the Carolinas are by you too, right? Aren't they? Yeah.
Yeah, they are. You know, we got a lot of good stuff.
They couldn't figure it out, so they needed a South Carolina and a North Carolina, so that like people know which direction they're going. Right? It's kind of like, oh, we're in the north side now. Got it. Right? Yeah.
Sounds right. Sounds right to me.
Mr. Weitzel.
Yes, sir.
We've been in a bull market. I don't have to tell you. You know, you count, right?
Yes.
8 days in a row to the upside for the S&P 500 and the NASDAQ. 9 out of 10 over the last 2 weeks since the VIX tripled. What does that mean to you as a financial advisor with how much in assets? How much are they letting you manage this year at this point?
Let's put it on 1.2 billion.
It's probably higher, but your filings only let you say 1.2, right? Am I close? Okay.
We're going with that.
I like it. Congratulations, by the way. That's a big number. Big number.
Thank you.
Yep.
Thank you.
And so when you think about it, right? So you've got these client assets, you talk to a lot of households and things like that, and you got the VIX tripling, and then stocks ripping 9 out of the next 10 days, 8 in a row. Like what does that mean to you?
Yeah, I mean, I think we got a big sentiment reset, and clearly we saw a bunch of people off sides, and so I don't know if we had a bunch of people that were shorting volatility again. You know, you had the carry trade. You had some big institutional investors that were maybe shorting the yen and borrowing money in yen and investing throughout the world. And so we had that fear that happened 2 Mondays ago that now everybody's paralyzed. And so but the trends in the market are still uninterrupted, right? Everything's still moving to the upside. As far as I see it, we just had a pullback within an ongoing uptrend. That's not always the case. We're not always in markets that are in uptrends, and sometimes we don't want to be invested, but this is a market that we've wanted to be involved with for a while now. And, we've seen the preponderance of stocks moving higher since the fourth quarter, and nothing's changing that.
When you hear people talking about how we need a market correction, we're due for a market correction. This is unsustainable. This cannot go on. And then you go and actually look at what the market's done, and you saw several years of market correction from late 21, early 22 through 23. And then even in the last 4 or 5 months from those February, March highs, you saw little to no progress in most stocks, most sectors and industry groups. So we've just completed a massive multi-year correction, looking to complete a pretty large 4 or 5 month correction. Do you think that the people that are looking for these corrections haven't bothered to look and see that we've had those on multiple time frames? Like, how do you think about all that?
Well, so first of all, I think most people don't understand that we can have a correction through time. It doesn't just have to be through price, right? When a lot of people talk about the need for a correction, I think they're probably conflating the NASDAQ or technology with the rest of the market. And, these are areas of the market, the NASDAQ, the technology sector, that are expensive. They've done much better than everything else. But when you broaden the universe of what you're looking at, if you start looking at small cap, you start looking at equal weight S&P 500, you start looking at anything outside of the United States, then you're talking about multi-year bases, 3+ years of no progress. You look at things like emerging markets and developed international, these are areas that haven't made any progress in 15 years, 16 years. And so areas that people have likely largely forsaken in their portfolio because they haven't performed. And so if people are calling for correction, I would say, first of all, they're ignoring the fact that we're in uptrends and a pretty persistent uptrend. That's not to say we can't have some bad days and some pullbacks in there. I think it's more likely that we're apt for continued rotation into other areas that haven't performed as strongly as, say, large cap growth domestically, mostly the
When
tech
are these
stocks.
international equities going to start to outperform the S&P 500 and U.S. stocks? It's just never?
It's they definitely are at some point, because the U.S. doesn't have a monopoly on good returns in the stock market. It's been that way for the last 15 years. I know this isn't a fundamental conversation, right? So when I say that at some point valuations matter to forward returns, that might be, I mean, maybe I could talk to Steve about that. I can't talk to you about that. But you've got to think that a major catalyst is going to be a weaker U.S. dollar. That's been a headwind for a number of years. And there was so much goodwill that got baked into China back, before the financial crisis. And they had gone parabolic at that point in time, that you clearly still have a tremendous amount of overhead supply there. But if we can ever take that out, we've got a long way to run.
I hear you on the valuation thing, but they've been cheap relative for 15 years.
The valuations only matter in the long term, right? Now, I don't know if it's one of those Keynesian things, in the long term, we're all dead. But at some point, it's going to matter. It's been a value trap for a number of years. And so that's why I think the relative strength studies are so important when it comes to portfolio construction, that you can look on a fundamental basis and say, hey, these areas of the market are cheap. But if that isn't translating into what people are buying, then you still have to have a more nominal exposure in your portfolio to those areas until they start to demonstrate some
Let's
relative
get back
strength.
to that dollar. Emerging market currencies, the index CEW, which is an equally weighted basket of 14 emerging market currencies throughout Asia, Europe, and Latin America. New 3-year highs.
Oh, yeah. I mean, if I would say that this may be a better gauge of market risk right now than a lot of other things that you could look at. That if emerging market currencies are strengthening, if we continue to see this particular security bid, that is probably not an environment where equities broadly are going down.
Throw up slide 1 and 2 there, Spencer, just to give the folks some perspective on what we're describing. So this is the U.S. dollar weakening relative to a basket of emerging market currencies, essentially. So this is making new 3-year highs. And if you zoom out to your earlier point about kind of longer term trends, go to the next one, Spencer. This is what that index looks like. Looks like a lot of upside.
It's got a lot of ways to go to recover. But just think about how messy the global equity marketplace got, really from that breakdown in 2014. That's when it got rough, right? That's when you had oil first starting to break lower, and you started to see the U.S. market leadership narrow, really starting at that point in time. And so, at this point, I don't know if you would consider this a counter trend rally. But as soon as we start to take out some of those former lows, so I would say like that big down candle there, which would have been 2013, right? That's probably taper tantrum. You'd start taking that out and you start getting back above those 2020 highs, then you've got a long way to run.
Should we own emerging market equities now that things are changing in the Forex markets?
And how do you define emerging market equities? Like, is it China? Is it ex-China? Do you cherry pick? Do you buy a basket? Like, how do you think about that for your clients specifically? Think about it like that, which are going to be different than Strazza's objectives.
Yeah, so we're earning in a more diversified manner, where obviously China is still a major component of what's going on inside of EM. We've talked about this over the last couple of weeks on Twitter, but if we rewind back 2 weeks ago to August 5th, that massive down day, Nikkei crashes, everybody's paralyzed that day, Dow's down 1,000. One of the only things in the market that was green was China technology. That area of the market has been decimated over the last couple years, right? So it peaked in Q1 of 2021.
Yeah. As did a lot of things, right? Biotechs.
As did a lot of things. But it has been decimated since then. I mean, it's still down 70 some percent since that time. So I think that a lot of people don't realize that there has been carnage in the market. Even still, there's been carnage in the market over the last few years. But the fact that these areas of the market were green on a day when everything was deeply red is somewhat telling to me. Now, I don't know if that's simply by virtue of the fact that maybe they were heavily shorted, people are unwinding their positions. I'm sure that contributed to some of it, but that's how every one of these sustainable rallies is going to begin for these areas that have been beaten down so much. Is you've got to have the people who have been short, they've got to start to unwind those positions.
And for me, it's a sentiment story more than anything. Something like China, this space is completely washed out. We have a lot of guys like you who come on the show and we ask them about China. They said, we don't do China. That's fantastic. What a setup. The same people who didn't do coal or uranium 4 years ago, right? They don't do China now. Fantastic. Love that setup. And you look at the charts, you got 3-year rounding bottom pattern starting to play out. I mean, these are massive bases. They don't look ready yet, a lot of them, when we talk about the Bob or the JD, but they're moving in the right direction. Definitely looks like accumulation.
That's right. And I'll say this, just anecdotally, I get emails from all these different asset managers all the time, and they want to talk about different funds and stuff that they're launching. And last year, we received a preponderance of we've got a new EM ex-China fund.
Yeah.
And so they always take it out at the absolute wrong time, right? In the aftermath of the financial crisis, it was S&P X Financials. By 2020, it was S&P X Energy. And so they always take out the things that have been beaten down the worst right before you really need them, right before you would really want them. But I'll say this, Steve, it's hard to blame people for their forsaking having exposure to areas of the market that have done very poorly over a fairly long period of time, because most of the time, most investors aren't overly nimble. They buy something and they're riding it, and if they ride it down a long way, they're going to be very reluctant to come back.
What do you think's going on with India? Is it overcrowded?
whether or not it's overcrowded or not, I mean, it's obviously it stood out big time as far as EM was concerned last year. But Mexico had done pretty well, right? Latin America had done pretty well. I think they're more towards the bottom of the list here this year in terms of returns in the EM space. From a fundamental perspective, I'll say the demographics for India are overwhelmingly positive. And so long term, I think India is probably a great place to be. But I mean, you look at the chart right now for India, it doesn't look bad, right? It's been basing for
Steven, I don't think you can handle
2-3
India.
months. Listen, my biggest concern if I were to go over there is I don't know what I'm going to eat.
You took the words right out of my mouth. Like, you strike me as quite the
I don't know what I'm
carnivore.
going to eat.
Yep.
I guess I'm just like taking an entire suitcase of protein bars with me to get through.
You got it. Honestly, like it's really worse than the first time I went. I mean, I would have killed somebody for a cheeseburger. Like I would have killed somebody. Like your body like has these withdrawals. Like it's no joke. So then when I started going again, I've probably been like a handful of times. When I started going again, I would just go a full week with just burger steaks. So by the time I got to India, the last thing I wanted was another steak. I'm like, God bless, give me some fish and some lentils. You know what I mean? And then I would swing by Tokyo on the way home and get my steak. Like, so I worked around it, but I don't know that you'd be able to handle it. I don't think
That's okay.
Great town,
I'm
though.
okay
Great
with
town.
that.
Who is the better bocce player, the Italian or the kid from Georgia?
Is Steve the Italian?
He claims.
Well, listen, we all know the answer to that.
Tell the folks how you whipped
wasn't
up
even
on him
close.
in Sonoma.
We will play again.
It wasn't even close.
I had a bad partner. Giancarlo doesn't know what he's doing.
And the reality is none of these guys, they don't want to get involved with these hands, right? The finesse in these hands.
Who's the better golfer?
Class.
Who's the better golfer?
Also,
I'll give you that
let's
one.
not. Listen, I don't. Let's give Steve some praise somewhere.
He's good at charts and trading. Like he's good at that.
Okay, all
Hopefully
right.
I see you in Chicago, and we will find a bocce court.
So listen, I am coming to Chicago. I told Steve I'm coming to his backyard at the end of September. So he and I are going to connect
in the middle of hurricane season.
I told him why. I told you why.
I got to go to a wedding. I'm going to a wedding. So I got little notice, but I'm booked. I'm going down there. Hopefully the weather
probably won't be.
We'll have some fun. I'll show you around. Hopefully,
Mr. Weitzel, just back to markets. I get distracted. We're almost done with August, believe it or not. It's Labor Day. Like we're a hot second from Labor Day.
Yep.
So we got September, October, November, December. We got 4 months. That is, for you math majors, about approximately 1/3 of the market left for the year. What's going to be the winning sector? Like, where do we want to be overweight? Is it same old leaders? Is it is it new leaders? Is it maybe more defensive? What are you thinking? Or does it not matter to you out of curiosity?
Well, no, it definitely matters. It 100% matters. Do I know for certain? No. However, I think we start to look at some of the intermarket studies and we see that the things that have been leading us, technology is no longer leading us. I don't know, you can throw that chart up, Steve, JC, Spencer, of tech versus the market, challenge those .com level highs.
Yep.
And so I think I would say having much exposure to technology right now, in my opinion, is a mistake. That I would much rather be invested elsewhere. I would much rather be invested domestically down the cap scale. I would prefer to be going into smalls. When we go into smalls, right, we're picking up more exposure to financials, to healthcare.
When did you determine that you wanted to own more small caps? Is this like a new revelation? Did this just happen in July? What?
No, so I think it's been brewing for a little while, but where I think that the big turn came was at the very end of June, when we got that CPI print at the end of June, and in that single session, if you guys remember, we had the small caps. So the Russell 2000 outperformed the NASDAQ by 5% in a single session. And historically, when we see that happen, it happened often at the peak of the dot-com bubble back in 2000 as it was unwinding. And so, again, I think that if we're going to be exposed to U.S. equities, I want to have very little exposure to tech if I can help it. That means I want to stay away from cap-weighted, large cap-weighted exposure. I want to be away from the cap-weighted stuff. Would prefer equal weight. I want to be more exposed down the cap.
What about this sucker right here?
If you're, I'm long small cap. I love small cap. You got to say if you're above 210 there, how can you not like that?
And I apologize for everybody out there. I'm not one to have these many annotations on a chart. It's not like me at all. So I apologize. But it just had to be done.
I like what you're saying, Stephen, about like we're seeing initiation type action in the relative trends that favor small caps. We've been seeing it it began over a month ago. You're right. That was the biggest day in history in a lot of ratios, a lot of relationships. People were just profit taking tech and moving into, I guess, the next best thing.
Here's the other thing and I don't know if you have this in the deck, but I saw it from Grant. First of all, I got two shout outs here quickly. One to Grant Hawkridge, down under, right? Miss you, Grant. Hope to see you again soon, buddy. The other, I met a dude when I met up with Sean out in Denver at his trader meetup. This guy just started investing, Trading Tiny, right? Shout out to Trading Tiny. But Grant had a chart that he sent me where he was looking at the correlation between the average security in the S&P versus the S&P. And it would have been at the same time, I think, late June. The correlation actually went negative on a short-term basis. A 21-day rolling correlation went negative. I don't know if that's ever happened before. The closest we got was at the peak of the dot-com.
It was the same situation. It was the profit taking, right? Like we had a couple of days a month ago, a little over a month ago, where 7 stocks were down and down big and dragged down the averages, and then 90 were up.
Think about what was up. You had industrials, financials, small caps, healthcare. It's like the other stuff, as that rotation took
real
place.
Estate, biotech, speculative growth.
So I'll say this with these things that we're talking about that are rarities in the market. I don't know if you can necessarily say I'm looking at these from a weight of the evidence perspective and I'm going to be bearish, right? But you're talking about things that the last time they happened was a period of time where you did not want to be involved by and large with large cap U.S. equities for sure. And so I think we got to mind our surroundings and recognize the fact that we're still in an environment where the trends are positive, and I think more constructive down the cap scale. But we still need to be mindful of risk.
And what's the big bold call?
The bold call. I've got it for you. You guys ready?
Scared to ask.
Are we ready? This weekend, okay, my boys.
Here we go.
We're in Dublin, Ireland.
Is that true?
This weekend. Yes, right? We're playing the Florida State Criminals. We are currently an 11-point dog in that game. And I'm going to tell you, there are times where the market is offsides. The market is offsides
Are you going?
on my Yellow Jackets.
Wow.
I'm not going this time. I went in
skipping the
2016.
game in Dublin?
Listen, I went.
What,
I
you got
went
some
8 years
bougie
ago.
member guest tournament or some shit?
No, that's a couple weeks from now. You know, my kids are back in school. It didn't make sense this time around. It hurts me because I'm getting emails from people and they're like, yeah, we're headed to Dublin. Are we going to see you there? And I'm like, wah, wah.
Dublin,
unfortunately
is
not.
awesome, man. What a great town.
But listen, everybody is sleeping on my guys.
No.
And I'm just
your
trying
guys
to
just
put the
keep putting
word
us
out.
to sleep every year is what's going on.
No, listen, hey, they put you in a sleeper hold, buddy. Listen, JC, he tries to talk so much smack. He can't get by me. He can't get by me. It doesn't matter if it's on the hardwood, if it's on the gridiron. He can't do it.
Last time I went to a Miami Georgia Tech game, Megatron was played for Georgia Tech, and we got whooped up. I mean, he had like 2 touchdowns. Weitzel was there, right? Haven't we discussed this? You were at that game.
Of course, yeah. I mean, I haven't missed a home game in a hot minute. But listen, speaking of Miami Hurricanes coming to Atlanta November 9th, we got a standing offer. Right, Steve,
I'm going to be there.
Coming?
November 9th.
Strazza is coming.
Yeah.
November 9th. JC's going to try to flake.
No, I'm going to try to make it. I'm of course I'm going to try to make it. It's an easy trip for me.
I know what that means.
I'll be
He's
there.
going to try to make it.
What time's the game? What time's kickoff?
We don't know yet. It's November 9th. But listen, hey, we're probably going to be prime time, baby.
Yeah, just try not
Jackets
to lose every game going into that, so it can be.
Jackets are going to be rolling. I'm going to tell you this: we're going to get the season started off on a strong foot.
What team in college football do you hate the most?
Sean.
Oh my God,
Sean's funny.
I mean, I'm going to say. I mean, I would have to say UGA, but I mean, there's a bunch of them out there. I mean, I'm obviously no fan of the Miami Hurricanes. I mean, I'm going to say I don't like any of them really, except for the Jackets.
Hates all of them.
Right? It's us against the world.
All right. And so, what's the over/under on wins this year? 4.5.
Oh, dude, I'm leveraged long on that bet. If it's 4.5, I'm going to say this: we're gonna win 8 or 9 games.
All right. You're playing a lot of those directional
games,
schools,
sure.
you know, like those.
Like the North Carolinas
like East
and
Carolina
such.
State, you know, A&M.
No, I mean, I don't think they're on the schedule this year. But listen, don't throw stones when you live in a glass house.
We got a Heisman Trophy winner, and we'll be there in the playoffs at the end of the year. And then, you know, I'll invite you over to my house so you can watch them with me. How about that? Deal?
All right. Listen, I just hope that I see you in November.
I hope so too. Deal. But we'll be together in Chicago next month anyway. All right, guys.
I'm looking
Adios.
forward to it, buddy. I appreciate y'all having me on.
I'm going to see him twice next month.
Steve Weitzel, getting a lot of Weitzel.
I don't know.
It's a lot of Weitzel.
Yeah.
No, listen, he makes some good points. I'm glad that we brought up the dollar. That emerging market currencies index hitting new 3-year highs. What does that mean? Does it mean as much to you as it does to me and Weitzel?
Yeah.
Yeah? You think so? Risk on? What about that Polish zloty? Can we throw up the zloty?
No, I want to talk about, how about the ringgit? Look at Malaysia.
Wow, when Strazza 2 days in a row getting shout outs to the Malaysian ringgit. Throw up slide 1 there, please. Because we were getting
Things are changing. Things are changing out in Asia. It was just Japan for a while, right? A little bit of Taiwan. Not anymore. These charts are really starting to turn up. Big trend reversals taking place out there. I think it's super early too. And I also think an environment where we're talking about Malaysia or the Philippines completing trend reversals, China's probably doing better. China's probably completing a trend reversal as well.
So you think that there's correlation there? Vietnam and Malaysia and these things are going, China's not rolling over.
the best intermarket info we have for Chinese equities are these little Southeast Asian countries.
You think so, huh?
100%. The charts all look the same. They've been blasted.
And what do you
Straight
think
line lower,
about what do you think about
2021.
the FXI not getting oversold on this correction? FXI relative to the S&P 500 not getting oversold in this correction.
Yeah. Let's talk about it. So
Right.
I'm heavy in the BABA. I love the BABA. I think BABA's shaping up, it looks great. There are other online retailers out in China and other parts of Asia too, though. Throw up the online retail index. Let's just do this.
Yeah, let's do this. This is great. I love this.
We did a deep dive on it, I don't know, a couple months back, but these stocks, they were all looking poised to complete primary trend reversals, or the early leaders were already taken out like the prior cycle highs. This is an equal weighted index that we made only of online retailers, not in the US. We included Amazon only, but the idea here was to pick the big one from different regions, different countries, etc. So let's look at some stuff that's in it. Amazon, believe it or not, doesn't look the best. Still down here, trapped beneath some overhead supply. Had a little short-term top kind of complete when it missed earnings a few weeks back, trying to repair that damage. We are seeing patterns like this repair the damage out here this week, late last week. So maybe Amazon back above 188 soon. We like it there. Now let's talk about some other Amazons that are not Amazon. This one looks the best, JC. The Meli, the Mercado Libre.
Some all-time highs.
My God. The chart looks fantastic. This one, we think you could be long above 2,000. What's next? Pinduoduo, China. You can play the BABA, you can play the PDD. JD is starting to look up. VIPS is also in our universe here, starting to look better. But PDD still looks the best. You got a little 62% retracement here that we think you could use to define your risk for a trade, but this one's probably headed back to those old highs. This is the single stock PDD that has looked good the whole time China has looked bad these last 4 years now. Right? So we're out here talking about better times in the future for China. Is the one that's been working the whole time going to stop working? I don't think so. So that's the idea here. What's next? This is my favorite. C Limited. This and the Coupang. I mean, this one we've been involved in for a while now. We got into the failed breaky earlier in the year, but the base is not even completed. This happens in the low 80s. You got the VWAP coming in right now. If we reclaim that, buyer's back in control. Big development. This is C Limited. They're all over Southeast Asia, very popular. Singapore, Thailand, Malaysia. Coupang. This is Korea. What a base. Perfect base. This is the chart we've been leaning into, buying this whole bull cycle. And Coupang's just coming out of it. Just now completing what I would call a textbook bearish to bullish trend reversal. 20 and a half is really that level. You got the VWAP coming in. That VWAP is anchored from the IPO day, which was also the all-time high. Straight lower. Didn't even get like a couple days pop that we typically see. Anchor that VWAP straight from the IPO date. We're just getting above it now. We're just getting through it now. So this is a fresh trend reversal. Like this one as much as anything. Sean and I put an option trade on it yesterday. Oh, this is a different thing. We could talk about solar later if you want.
I'm curious about solar. Can we just go there? This is one of those areas that have been so beat up. I mean, these solar names have been slaughtered. Remember we used to talk about like SEDG and the other one. These were like the best stocks in the world. Remember?
Yeah. Yes. And also, great point, Nick. I said BABA's not ready yet. The primary trend reversal is not complete in BABA. That doesn't mean I'm not jumping it. So me being in it and me saying that the primary trend has not turned higher yet, two different things. So JC, they don't all look good, but things are changing. These charts are not breaking down. Besides you, SunPower, you're a zero. But SunNova, Sunrun, these are some big technical developments, right? Reclaiming some big levels here in Nova. This is a weekly line chart. Keep it simple. Look at how clean this is. Right, back above a monster level where prices bottomed out before COVID, after COVID, and then again late 2023. Look at the Sunrun, draw like a 4 or 5 year trend line like this, breaking, right? So buyers kind of, showing back up, trying to complete a little trend reversal here. This one's probably close. And then if you think about these ones, which have been the laggards, they've been bad really the whole time. Something like Enphase, I think about this stock every now and then. I lay in bed and I think, wonder what Enphase is doing. because this was
You're like that meme, you know, that meme where it's like a guy and a girl laying in bed together, and she's like thinking about what he's thinking about, and she's like, oh, he's thinking about other women, and then it's you, and he's like thinking about end phase, right? You know, you're that meme.
I'm thinking about that 44,000% rally in end phase years ago that nobody talks about anymore. It's like, you know, you give back 75%, everybody forgets about you. But I look at this one and I think with what's going on in some of these other names like the Sunrun and the Nova, that's probably not a top. It's probably not a top in end phase, right? If it is a top, look out. But this one probably digs in here. We got a clean level, right? This was really the breakdown from that top, multi-year top. If we hook higher here, this is probably going to be at the top of the list of the ones that you want to own of one of the best vehicles in solar. So I would just say be ready for that. And we do have a clean level. And then the leader, there's the current leader. This is the old leader, end phase. But how about the current leader, right? So if Sun Nova and Sunrun are going to start doing better and the whole space is going to start doing better, First Solar is going to dig in here and rip higher. This is an AI stock now, right? So this one is done far better than any of.
Is that true?
Yeah. The solar panels are like powering AI compute facilities or whatever, big data facilities. So look, it's clean, right? So maybe not for everybody. It's a high price stock, which I don't love because I want to do things with options on it. I don't know if it's a great candidate for that, but it's super clean right here. And when you zoom out, right, this is what's going on just over the past year or two. But if you zoom out the next chart, wow, we're going to like it a lot more soon, I think, right? Look at this base. It's a monster financial crisis base. That's all I had prepared, JC.
No, I if this is the best one and this one's below overhead supply, what does that mean for the space?
I mean, you could have said the same thing about banks not long ago.
Yeah.
You know, outside of JP Morgan.
Yeah, but JP Morgan was already taking out the former highs.
Yeah, but if you remove JP Morgan, all the other banks that look like this, they're going to work through it. I don't know. This
will be the first one. Right?
It's mixed because yes, there's overhead supply when you zoom out this far, but also this stock has been a monster from 30 to 300 since the COVID lows, right? So that shorter term relative strength, I think probably trumps the fact that we have some overhead supply from 25 or 15 years ago.
Spencer, what's going on out there in the world of financial markets this morning? Anything exciting happening, or is it the nothing burger that is the market with the Dow futures flat, S&P flat, NASDAQ flat? I mean, there is just nothing going on except for precious metals. Precious metals are the only thing
we
moving
got some
this morning.
stuff. Well, Steve mentioned VIPs just now, didn't you, Steve? VIPs is.
Did they beat?
No.
Oh man,
no.
They did not beat.
Did not.
VIPs. Maybe
actually, I guess technically they did beat, but they're down 11%, 12%. So
not a beat then.
And this is the Uber of Vietnam.
No, that's Grab. That's GRAB. They did just beat, I think. Oh no, they missed.
This is the Amazon of Vietnam.
No, VIPs is China.
What does VIPs do?
China. Online retail. I don't know.
Online retail. Got it. So this is the Amazon retailer. This is like the Amazon Junior. So if Baba's the Amazon, this is like the Piker version.
Can you be like a boutique online retailer?
Yeah.
Yeah. So that's probably something like that. Provision of online product sales. Doesn't tell me what.
China. Who the hell knows?
Shan outlets.
Do you believe a word that they're saying?
Yeah. Next time you're in China, stop by the Shan outlets, do a little boots on the ground research. Let us know about VIPs. But that's all I know. It's an $8 billion.
Get some dumplings.
Get some dumplings. Yeah, I like dumplings.
Dumplings are great. I was trying to explain to my daughter what a dumpling was yesterday. I'm like, it's like a meatball, but then like in this like tortilla wrap. I tried to. She's like, yeah, I don't think I like that. I'm like,
tell her it's wrapped in pasta.
Yeah, it's kind of like a noodle. Yeah, it's a good. That's what I'm going to tell her. She does love noodles.
I mean, besides that, a couple earnings, right? I mean, here's the calendar for the week. Not much. We did have Lowe's this morning, Palo Alto last night, so we can look at those. Fibernet was the big winner this morning.
Which one?
FN. Wow. Last I checked, it was up like 10%. And that was pre-open though, so I don't know.
Are the home builders meeting? The home builders are reporting.
Well. Yeah, we had Lowe's, not a home builder, but Lowe's gave some pretty cautious guidance this morning.
Really?
So Lowe's is down Oh, barely. Wow, I thought it was done more for some reason.
I've been
All
having
right.
conversations with some of our smart friends about this, where we're just getting such mixed readings on the consumer from these
Yeah.
reports. We get
Yeah.
one out yesterday where the Walmart comes out, oh, it's so strong. And then the Lowe's comes out, oh, it's terrible. And then Starbucks comes out, oh, it's awful. And then Uber comes out, it's fantastic. They're just different businesses. I don't think all of these guys who think that like Uber's business or Walmart's business or Costco's business is some huge read on the US consumer. You know what it really definitely is? It's a huge read on their business and how they're doing. But to think that you can extrapolate that, Spencer, fine, a handful of companies can, and it makes sense. But 95% of them, stop talking about the consumer. It's just your customer. It's not the US consumer.
There's definitely a trend with us in terms of a slowdown with bigger ticket items across the board.
I know,
Cars,
like that Ferrari chart just can't stop going up.
Pools, RVs. Lowe's said it this morning. Whatever Lowe's categorized as a big ticket item, that they're seeing a slowdown, right? So
but JC's right. Not all of them. What about a Ferrari? I get it. People are telling me about boat sales are down. Fantastic. But people are still buying Ferraris, both luxury goods.
No, but they're doing something about it. Like,
I don't know.
Like Harley Davidson, for example, right? Harley Davidson's been a disaster. So they just canceled all their woke policies. They just said this was stupid. Sorry for that. And like they just did that this morning.
Oh God.
You see that?
But also I do take issue with the idea that like the DEI is the reason the stock is down, right? Like
what's a DEI?
Diversity, equity, and inclusion. That was
like this weird thing they do in California.
Listen, Harley Davidson. Who does that?
Why is Harley Davidson trying to get all woke? Right? Like, so what happened to Anheuser-Busch? Same thing. They pissed off all these people.
And also the comment about Ferrari. Yeah, the line's going up on the chart. I don't know enough to know whether their sales. I mean, you could assume the sales are increasing.
It looks like that. Yeah.
Yeah. They're probably nobody's buying Ferraris. That's why the stock.
We don't really know. There are other factors at play. Someone in the chat's talking about margins. There's always like
probably the economy in Italy is just so off the track.
Could be buybacks. You don't know.
They just beat their top line by 5%, 1.83.
All right, whatever.
Can we talk about? I want to talk about cybersecurity.
Yeah, Palo Alto.
Can you throw up Palo Alto up this morning? Throw up slide 1, Spencer.
Not my Palo Alto.
Reported.
I wanted to lead into that a little bit.
All right.
I did have a question for Strazza.
Yeah.
Throw up slide 1. So this is the hack ETF. So this is the cybersecurity, right?
Spencer is a proud shareholder.
No. I own the other one, the cyber.
You own the cyber? Okay.
Yeah.
So this one is 10% Broadcom, 7% Cisco, unfortunately, 6% Palo Alto, and then it goes Northrop Grumman, General Dynamics. You got aerospace and defense there. Looks great. Looks like it wants to head higher. The next chart, though, this one, I would have thought that this would be a cybersecurity stock. Strazza, is that just I'm being ignorant and I don't know anything? It's not cyber, apparently, right?
We've talked about this. It is.
Yeah.
How come it's not on the hack?
Because whatever index they follow didn't.
It's as cybersecurity as it gets, in my opinion.
That's what I thought too.
Yeah, it's a different kind. It's more like on the data mining.
By the way, it's not in Spencer's cybersecurity ETF either.
All right.
It's not in either one. It's not in the SIBR and it's not in the hack.
CIBR.
Sorry, what did I say?
It should
SIBR.
be. I'm sure it's in one of these cyber funds, but these funds, build your own basket.
No, I was just surprised, at that because they kind of look similar, right? The cybersecurity looks just like the software index, by the way.
Well, it's software.
No, I get that. That makes sense. But Palantir not being on that list, I thought it was a little bit strange. No?
Yeah, that stinks for those ETFs because this one looks better than just about any of the others right now, at least over the short term. Palantir's at new cycle highs. I don't see the others at new cycle highs. Maybe Palo Alto gets there today.
Palo Alto might get there today. It's up almost 6% now. Earnings good, guidance good, an additional $500 million authorized for more buybacks. Good.
Listen, another individual name that I like in this space a lot is the Zscaler, and I think it's quite actionable right now. It's done nothing this year. That's ZS. ZS looks great.
That is cyber,
Yeah.
like officially, and included in the indexes too.
Yeah. Checkpoint looks fantastic, actually.
Yep.
Got to give it to Checkpoint. Wow.
These are the best stocks, right, Strazza?
Software?
Yeah.
Yeah, I mean, these businesses are just built different. They can scale to the moon. It's
And
incredible.
you think that if technology is an underperformer, you could still get some of these software names ripping and outperforming?
Always. It'll be like the software of the insurance industry or the software for the restaurant industry. It's always like these niche software businesses coming out and disrupting an old industry. Financial management, RIAs use all sorts of fancy software.
These fintech companies are software at the end of the day, the fintech stuff.
Tax preparers use the software, right? So if somebody's been making a software that's the industry standard for 10 years and you make a better one, I mean, the growth potential there, if you come in and disrupt an industry and all accountants start using your tax software instead of the old one, that's what these businesses are doing to each other, like left and right. So it's competitive out there. It's competitive space.
What did we say? We do a little recess and get back to work, huh?
Yeah. Why is Redfin up 10% this morning? Zillow's not. It's weird.
I know, because I'm hearing terrible things about real estate too. Unbelievable.
I don't know.
You just can't trust it.
Other headline that I saw, shout out to risk arbitrators. Looks like the Hawaiian Airlines, Alaska Airlines merger is going to go through now. The DOJ's window to fight it.
Should we make a
ended
rule
yesterday.
that we just don't talk about airlines anymore?
Yeah.
Should we just
Hawaiian's up 12% today because
we don't cover that space anymore. You know how like funds.
I went through every single airline chart last night.
Well, like some fund
You want me
managers.
to give you the hold on, you want me to give you the Cliff Note version of that?
Oh my God.
They all go from the upper left to the lower right.
what about
Why would you do that to yourself?
what about Air
Because
Canada?
I wanted to show the transports, and sorry, Spencer, but I wanted to show the transports, but I wanted to preface with these all suck. JetBlue, UAL, American Airlines, Alaska Airlines, like all of these, just one's worse than the next. At Delta. And then you look at the rails and the logistics and the tranny, the truckers and all the FedEx, and they all look great. The shipping, marine shippers, Madsen, Kirby,
The Old Dirty.
So what happens to the transports if airlines stop going down?
Oh, okay. Well, that's a big if.
Fine, but these things have gotten crushed, bro. Crushed. Your sentiment right now towards these airline stocks is oozing out of you. Oozing. I can see the hatred coming out of your whole thing here.
Sentiment is usually on the right side. And in this case, I think if sentiment has been bad for airline stocks for like a decade, it's been right. So I don't know. Is this group washed out like in a way that we're talking about China's washed out? I don't know, because if you look at their income statements, it's really hard to make that call. These companies don't make.
Don't look at their income statements.
Oh, this is such low margin businesses. They're disrupted by the weather and like everything that happens, pandemics, like anything bad that happens in the world fucks up airlines businesses. It's terrible. And then the experience is awful on top of it.
It is such a, I can appreciate the logistical complexity of the business, but it doesn't change the fact that everybody has bad experiences with every airline. Name an airline you haven't had a bad experience with. It's impossible.
You know what I would love to know? Who writes the business insurance policies for these companies? Because you know that when there are disasters, like they're getting paid for lost sales. Imagine being the insurance company that has to pay on that policy. That might be there might be a business that's worse than airlines, which would be the companies that are insuring airlines.
I don't know. You're from Connecticut. You should know better. These guys in Hartford they're going to figure it out, and they're going to make money off of that.
Yeah.
Come on.
Don't bet against the actuaries. Come on.
So
I definitely do not want to bet against actuaries. They're way smarter than I am.
JetBlue looks like a 0.
They all look like a 0.
Wait, aren't they getting bought? Never mind. Whatever. Recess time.
All right, recess. For my recess, I just wanted to share one more chart because I can't help myself. Throw up the new slide 1. just to kind of give you guys just final nail in the coffin for these guys. I mean, just oh, come on. How bad is this?
Jets is definitely one of the more well-known, if not the most well-known, industry-specific ETF out there. Everyone knows Jets, right?
Do they?
And
I don't think
this
that's
is-
true.
well, it's been around for a long time.
Has it?
Yeah, I mean, just look at this chart. This chart goes back 9 years.
It's been around 9 years. That's how long it's been around.
That's a long time, man.
Yeah, it trades 180 average volume, 2.3 million shares. Yeah, it's more than I thought, actually.
It's a lot.
All right, I'll give you that one.
Everyone knows about Jets.
More people apparently know about it than I thought.
Yeah,
It trades a lot more than I thought. So I'll give you that one, Spencer.
So,
I mean,
comments in the chat about Palantir not being cybersecurity. First of all, you don't know. The public does not know what they are, what they do. Right. Second of all, 10 years ago, I did a lot of work for this company. I worked at a hedge fund that owned a huge minority interest, and we were in charge of the accounting. The two PMs that ran that investment, one was the venture capital PM, which we had a number of, and the other one was the guy who had the cybersecurity book. So they considered it cybersecurity. That was 10 years ago. So I've always considered it cybersecurity too. Also, something could be big data and also cybersecurity.
That's right. You think there's any sort of government situation why they're not being included in these ETFs, or no? That's just too much conspiracy.
No, I think it was probably a profitability situation more than anything, right?
Huh.
Like they're going to get added to the S&P 500.
Because they haven't yet.
Yeah, maybe that opens them up to be in more funds, right? I think it would be that probably. I think Coinbase can get added to the S&P 500 too, guys. I think it's a total wild card, but like they're on a short list too. Nobody's talking about that one. You know what happens to these companies when they get added to the S&P? Like that's a big deal. It happened to CrowdStrike earlier this year. Uber, remember? Like they get big run-ups.
Yeah.
So if you could catch one that might get added when nobody's really thinking it's going to get added, you get a big move there. Market will be off sides.
We'll talk about it in the meeting tomorrow, but I want to follow up on what we talked about like those like next like the biggest non S&P components, right? Having that built-in catalyst that you're describing. Let's lean in on that in tomorrow's
I
meeting.
think that makes sense. We just need to check up on their profitability screens and then add the same ones. That information is somewhere. We just got to find it.
All right, cool.
I don't really have a recess. Steve, do you? I kind of got nothing.
No, I just want to say like what a boring time of year it is because there's just no good sports on. Like thank God we had the Olympics. That kind of saved us for a little bit. But
what about America's pastime, Strazza?
I cannot wait for football to come back. I don't watch that shit.
Couple weeks.
FedEx Cup. We got the FedEx Cup going on. Like that.
Go to some of the Key West baseball games.
There's no Ryder Cup this year.
You go to the high school baseball games?
No.
What about the football games?
We should. I don't know.
I want to go to a Lehigh football game this year, and I want to go to Saucon High School. They have a good schedule. I want to see.
I used to love high school football, and I know it's big down here, so we'd probably enjoy that.
It's big by me too.
Yeah.
I've never been to a high school football game in my life, even my own high school.
Sometimes I drive up.
Went to any of your high school football games?
No.
Sometimes I drive up to watch the Hurricanes and feel like I'm watching high school football.
Hey. All right. Got him. All right. What's today? Today's Tuesday. We got spaces in an hour. We got chart request live at 1. That will be right here on the channel. So thanks for hanging out. Thanks, Stephen Weitzel, for hanging out. He gave us a very generous amount of time. Thanks to everyone in the chat for the super chats and the normal chats. We like them all evenly.
Oh, I got one, Spencer. I got one. We've been talking about
it.
The Bad Monkey. Really cool. If you watch it, it's all taped in the Keys. And JC, the first episode, there's like a shooting, and it happens at. You asked me the other day, what's the best place to go for raw bar? And I said raw bar, half shell. So the shooting in Bad Monkey is at my favorite happy hour place.
Oh,
fantastic! And they talk about it all the time. They're like raw bar.
How's Natalie? Did she do a good job? She a good actress?
Yeah. I mean, listen, it's a little like corny, but it's cute, and it's all taped in the Keys. You see Mallory Square, Duval Street shown like over and over and over. That's fun.
I guess I know I'm a month late, but I finally got around to watching the season 3 of The Bear, and it's just a tremendous show. So if you don't watch The Bear,
I got
there.
that's on my list.
It's so easy. They're like 25-minute episodes. You can just bang through it. It's great. That's all I got. See you guys on Spaces and CRL. Have a good one.
Adios.